Hey guys, Dave Santarelli here from the Santarelli Trading Exchange. Huge day on Wall Street today. The markets are down over 831 points. Huge sell-off today, and we have a lot to go over and a lot I want to discuss. First off, let's start off with yesterday's video. We went over this chart of DIA right here, and I showed you guys the specific pink lines here that are support. And that if we drop below those, it was time to buy some puts and reverse on the markets. And then I showed charts of the Dow that are over here on the other section here, and we went over certain areas where the Dow could drop down to. So in the trade room today, first I showed that it failed to break bearish sign. 260 was the next support on the Dow, and that was when the markets were only down like 200 points this morning. I ended up talking about a perfect formula for Hedge. Okay, so this morning when the markets were down about 300 or 400 points, we ended up getting into some diamond puts as a hedge trade. Okay, I want to go over this concept with you guys because it's important, because you need to understand how hedges work. Okay, first off, let's just use an example that you have $10,000 invested into calls for a November expo on stocks like Walmart, J&J, your consumer staple and healthcare type of stocks that are strong stocks when the market turns south. And it's good during the holiday trend. Okay, so let's say that you had $10,000 into calls for November and you're seeing a short-term sell-off here, but you still feel good about your stocks for November expo. And like I said, you have $10,000 in those. Okay, so what you can do, like we did today at TSE, when the markets were down 200-300 points or somewhere around there, I forget, it was around lunchtime, we ended up getting into the 259 strike puts on diamond for this week's expo as a hedge. And I told members how you do this is you calculate if you have $10,000 into your positions and you feel that if those stocks went against you and hit your stop, what would your loss be? And you can calculate this with options very simply. What would your stop be if those stocks hit those stop loss? And if you have $10,000 invested and you say, you know, if that hits my stop, I could potentially lose $3,000. That's your risk, $3,000. So then what you want to decide is what kind of hedge could I make that if the markets goes lower, that hedge can make more money than the calls that I have that are losing. And what you do is you come up with a position like the one we made today. We bought the diamond 259 strike puts, and it's a small trade based on what we have for November expo. So like I said, if you felt that $3,000 was your most risk, you could do something like $1,500 into the 259 strike puts. And then in your mind, you're thinking, okay, what's the max gain on those diamond puts? Okay, and how you do that is you're looking at the next support level. All right, so before you even enter into that put, you're thinking, all right, if the diamond, the Dow drops to this next support level, how much is that trade going to make? And in my head, I was already thinking, okay, I'm looking for a 200% return on this hedge put. So in my mind, I said, all right, if I put in around $1,500 to $1,800 into this diamond hedge put, that's going to cover me if the Dow continue to drop. That's going to cover me from the losses against my long-term calls for November 16th monthly expo. This is what happened. We got into the diamond October 12th 259 strike put in the afternoon today. We got in for $1.91 a contract. I got 10 contracts, so that means it costed me $1,910 for this diamond put. So it costed me $1,910. It's now worth $4,350. We have a 127% gain in just a couple of hours on our diamond put that we got as a hedge against our long-term calls for November. And like I said, they're not regular calls. They're not tech. They're not, you know, something that the market is what's the term here? It's not like a momentum. It's solid cyclical, consumer staple stocks. So that's why I went with those when I seen some volatility last week. So we're in some really good trades right now for the November monthly expo. And like I said, we took advantage of the market today when it was down 400 points. We bought these puts that are up now 127%, made $2,500 on that already, and that was a small $1,900 trade. So I'm already up 127%. If tomorrow we have another sell-off like today, I mean, this is going to be up closer to 700-800% returns. But I don't see another huge sell-off like today happening. I do see a little bit more selling. That's the other thing I wanted to go over next. So first off, guys, like I said, if you're a member, or if you are a member and you weren't in the trade room today, go check that out. I made an example of how to take advantage with a protective put hedge in a market like this for a long November expos. If you guys seen this morning before the sell-off happened, first off, there was nothing really to trigger the sell-off. First off, like I said, Costco, J&J, Walmart, everything, Home Depot, a lot of the members, if you guys remember yesterday's video, I said Home Depot calls for the hurricane hitting. We got in yesterday on those, and some of the members locked in like a 70-80% return on those this morning. Some of them held. I personally held on to mine a little bit longer. That's for next week's expos we got. You guys could see that video on YouTube channel. So, you know, we're going to keep progressing here. You know, if we talked about something in yesterday's video, we'll talk about it again today. You know, the thing about this is here, we're being honest, transparent. We're showing you guys everything we're talking about, where the fails are, where the successes are, and how to trade. So guys, next thing I wanted to go over here is an example of a reversal I went over in the trade room today. Here is something that I told members that we wanted to watch and make sure I don't see this pattern. Now, if I start to see this pattern, this is going to worry me, and then I'm going to start buying some puts. Like I said, right now, this happened so quick, it could just be a plunge and then a buying opportunity. So, you know, a lot of the stocks drop so quick too, that, you know, that to me is a good sign. I'd rather it be over quick than seeing the buyers come in again and jumping in on that bounce. Like I said, tomorrow and Friday will tell us a lot, but here's one thing I do not want to see with the Diamond ETF here. I don't want to see a reversal. I went over J&J chart. If you guys remember, I shared a picture of J&J where we had a downtrend, a trend reversal, and then an uptrend. And I shared that chart everywhere. And what I'm trying to get at here is just like our momentum. We have three types of trades: hook patterns, breakout momentum, and channel range bound trades that we trade. That's our top three chart patterns. So just like the breakout momentum going higher where you'd buy calls, the same is true with the opposite. So if you have a declining market, every time it climbs up to that 20-day or 10-day SMA and then drops further, that's a breakdown momentum. So just like we have breakout momentum, we have breakdown momentum stocks as well. And so this is what I was kind of getting at in the trade room today. If I see this happening, where we have a reversal from the 10-day crossover to the 20-day SMA, and then the stock, the candles, get up to that 10 or 20-day and then drop, and then climb, get up to it, drop. You know, if I see that type of sign happening, then immediately I'm going to be turning around, buying some puts, and, you know, changing strategies in the market here. But for right now, like I said, we're just going to see how that goes. We came down to the 50-day SMA on the Dow. That was actually earlier. We dropped below that today, so we're closer to the 200-day SMA now. So here's a chart on Amazon I want to go over next. If you can see this chart on Amazon, we went over what happens each time Amazon has dropped below the 50-day SMA. And if you guys remember, I put a definitive stop in chart with Amazon last week. I said if we get a crossover below these SMAs here, the 10 and 20-day SMA, that's our stop, and that the stock was likely to go much lower. And if you could see here on the chart, each time we broke below the 50-day SMA, we either got down to the 200-day SMA, or, you know, we climbed about the 150-day. So right now we're about at the 150-day on Amazon. We still have quite a ways to drop to the 200-day. So, you know, we have to be careful there. A lot of the members were asking, Dave, do we start buying tech now? The answer to that is absolutely not. Stay away. I know we've made a lot of money in tech on our trades over the past, but right now is time to stay away from tech. Put that off your radar. I know it's hard because a lot of people have made so much money on tech over the past several years. It's been a hot sector, but right now, trust me, you have to stay away, step away, and let it do its thing. Let it find its bottom. If you see it break below those major SMAs or major support areas, you can buy some puts, just like we found on the Diamond ETF today. When I seen it break below that 50-day SMA, I said, guys, it looks like we're going to head much lower here. I even said in the trade room when we were down around 400 or 500 points today, I said, guys, I feel like an 800-point sell-off's coming. I said, what if we drop 800 points today? And here we are, 831 points down. I mean, that was just a coincidence because I remembered back in August, I think in 2015, just a few years into my service, and the market dropped 800 points one day and then 500 points the next day, and then a week later we were at new all-time highs again. It was funny, everyone was panicking that the end was near, and then a week or two later we're at new all-time highs. So so like I said, we just have to watch SMAs. We have to see what's going on. Don't be aggressive right now. Sit back, watch, see what the markets are doing, and wait for those good entries. Because I'm telling you right now, the market's down over 1,000 points in the past week here. If you wait for the proper opportunities here, let your account stay on the sidelines. And once you see these opportunities, you can jump in and make a lot of money. And like I said, guys, it's important to know how to hedge, because if you're able to hedge yourself like we did today at TSE, you could be looking at some good gains. So we locked in, some of the members locked in gains on HD today. I seen in the trade room a lot of them, thinking on that trade. It was a great trade. They locked it in. And like I said, I didn't lock in mine yet. I was holding mine until Friday. Guys, we have a lot of videos on our YouTube channel, so if you guys could take a minute, go to our YouTube channel on YouTube, the Santarelli Exchange, subscribe and like and hit the bell to get notifications every time we upload a video. That way you're up to date with all that's going on with TSE and with the markets. And if you'd like to join our service, you can go to thesantarelliexchange.com and use promo code Brazil. Thanks, guys. I will see you tomorrow in the trade room, and let's see how the day unfolds tomorrow. Thanks, guys. Have a great night.